Good day, everyone. I'm Steph Wissink, Managing Director and Senior Research Analyst on the consumer team at Jefferies. And the team is pleased to be hosting a four-part series of ESG-focused webinars with leading brand agency Barclay to explore evolving attitudes towards sustainable brands. Today, we are hosting a topic which is called Why the CFO Should Care About Sustainability and How Regenerative Finance Drives Returns. So the format for today's session is I'm going to hand it over to Lindsay DeWitt from Barclays. She's going to lead the core of the session, but we've left about 10 minutes at the end for you to ask questions. So if you do have a question, we're going to use the raise hand function in Zoom. You just press that raise hand, and at the end, I'll come back and call on you for questions. So Lindsay, over to you.
Great. Thank you, Steph. Appreciate it. Thanks, everyone, for joining us today. I'm Lindsay DeWitt from Barclay. We are a certified B Corp agency in the middle of the United States, and I lead our firm's sustainability practice, collaborating with brands on establishing their ESG strategy and also using those to help drive impact inside their brand and out. And we're so happy to be here today and share why we believe your CFO should care about your organization's sustainability commitments, because it can drive returns. Regenerative finance is the idea that investing in people and planet around your business is far from a cost, but actually a way to unlock more growth. Finance is a critical role in accelerating the capital flows to ESG innovation that are imperative in today's economy. And so today we'll cover the why and the what of regenerative finance function. We'll discuss it from a strategic and also from a tactical point of view as we share a framework that you can use to support collaborative decision-making around capital allocation, performance, and also impact. And so I'm very pleased to introduce our three incredibly insightful panelists today. And I will do so with an introductory question. So first we have Marco Venturelli. Welcome, Marco. Marco is from Novartis, Italy, and he is a member of the B20 Task Force on Sustainability and Global Emergencies. Marco is a purposeful and solution-oriented executive with an interest in making finance, sustainability, and happiness become drivers for a better world. And he has reimagined the role of the CFO. He's a leader who brings change and improvement. The CFO, as a leader who brings change and improvement to the company, is attentive to innovation, well-being, and happiness of the associates, and the ecosystem of the company's stakeholders. And as part of his work with Novartis, a world-leading company in the life sciences sector, Marco has held also various roles in finance, business, and operations throughout Italy, Europe, and on many global projects. And so welcome, Marco. Thanks for being here today.
Thank you, Lindsay.
And I'd love to kick it off with your wrap up your introduction rather with a quick question and get your perspective on as we are building toward this sustainable future that we all desire. What do you believe are the biggest implications for the finance function?
Thank you, Leslie. I think our challenge is quite huge and interesting. Using the words of Marvin King, accountants can save the planet. And so this is what is my long-term strategy. My shorter-term strategy is that improving the way we report about our results, including sustainable and impact on planet, will really give better information to the investors and help the society improve.
Great. Thank you, Marco. I'd also like to introduce our second guest today, Harmeet Singh. Harmeet is the Executive Vice President and Chief Financial Officer of famed apparel brand Levi Strauss & Company. Harmeet is responsible for managing the company's finance, information technology, strategic sourcing, and also global business service functions globally across that organization. And this includes everything from financial planning to corporate development, enterprise risk management, and IR, all topics that we'll be discussing today. Harmeet has spent his career working with global consumer brands within the hospitality, restaurant, travel, and financial industries, including Hyatt Hotels, hotels, corporations, Yum Brand Foods, and American Express, all of whom have some fabulous sustainability strategies that we admire. Welcome, Harmeet. And with your welcome and introduction, I'd also love to pose that same question to you. And also, I think you have an interesting perspective as a founding member of the US chapter of the Accounting for Sustainability Project. So I'm excited to pose this question to you and get your perspective on, as we build toward a sustainable future, what are the biggest implications you feel for the finance function?
So thank you for having me, Lindsay, and I look forward to talking to my fellow panelists. I'd say the role of the CFO, let's talk about that for a second, and then implications of the finance function. I think the CFO can do two things. One, set the right tone at the top. And second, ensure that whatever work we're doing across all our stakeholders creates value for all of them. I think those are the two broad implications for the CFO, as some of which Marco alluded to. To your question about the finance function, and I'm involved with the A4S and His Royal Highness Prince Charles organization. His view, which I resonate with, is the finance function sees everything and can impact everything. And so I think as we think about the implication for the finance function, there are about 4 or 5 things. One, integrate sustainability or ESG initiatives with strategy. Second, you need to balance a short-term look versus a long-term orientation. There are times where we will invest in the short term for a long-term payback. Capital allocation, we'll talk more about that, becomes critical as we strive to achieving goals and results which are better for the planet, especially on water and climate. Disclosure is becoming very critical. And we're working with disclosure groups, whether it's the SEC or other standards, to ensure there is some kind of standard disclosure. And last but not the least, being a public company, one of the things that's coming out through the pandemic is the focus on what we think conscious consumption. The consumers are really focused on interacting with brands and companies that are doing the right thing, whether it's for the planet or for employees or for other stakeholders. Is very critical. Investors are now, at least in the US, investors overseas were already there, but investors in the US have actually jumped on the bandwagon. And as a public company, we just reported earnings last week. A lot of large institutional clients are talking about what are we doing on ESG. And Levi's is in a great position because we've been doing it since Levi Strauss himself 150 years ago. And so happy to discuss more. But I think finance can make a big difference.
Great. Thank you so much, Harmeet. I love that nod to looking at your origin story of your company. In many cases, there certainly are some nods to sustainability very early on in the birth of companies around the world. So thank you for that. And to round out our trio today, I want to introduce you to Scott Broomfield. Scott is the executive chair of Sustainable Brands, an incredible organization that Barclay is very proud to be an affiliate member of. He's also founding member and managing director of the EPIC Fund. Scott is a true believer in that people are awakening to their human potential and the impact that all of us can have on society, including business as a force for good. And so his 10-year mission has been to make a lasting impact on co-creating innovation ESG solutions at scale and building a regenerative future. Welcome, Scott, and I'm going to invite you to please take it away. Scott's going to share a few slides to help frame the rest of today's discussion.
Lindsay, thanks. I appreciate it very much. I appreciate the invite to participate in this. And to my colleagues, Marco and Harmeet, I really appreciate you guys carving time out of your busy schedules to talk on this topic. So very much appreciated. Buckminster Fuller said that we are called to be architects of the future, not its victims. He also said that we want to make the world work as soon as possible through spontaneous cooperation in ecological alignment with nature and to the detriment of no one. And that is the era that we are now entering into as we think about how ESG frames this in to how we do decisioning. And my personal belief is that it changes when monetary and capital flows change. Until the dollars start becoming invested very actively and aggressively, you don't hit the inflection point in terms of innovation. There are some amazing things happening around the world now, so I'm very optimistic and bullish, although there's a lot of work to be done. I'm going to share my screen and spend just a minute setting some context. So let me go into presentation mode and move that down that way. Lindsay, can you see that? Just want to make sure we could see it.
Yes, we're good.
Great. Okay, cool. So first, the first question is, we talk about sustainability and then we use this word regenerative. And in my conversations with folks, people say, well, what's the difference? So this is a slide that I found some months ago, maybe even a year or two ago, that basically says sustainable gets us back to even. Regenerative makes us net positive. We think about biomimicry, biodiversity. We think about how we can come into our world and not only be at one with nature, but recognize that nature is regenerative by design, and mankind and humankind can participate in that and actually be net positive to nature. And that's the subtle difference between regenerative and sustainable. It's sort of the next step along the journey. And I think this is a great way to map this. It also talks a little bit to the fact that we know in nature, there are no straight lines. Everything is circular and spiral. And that's what we talk about when we look at our economy, is circular and spiral. And how does it all interconnect? How do the circular supply chains work? How do we go from large companies to small, SMEs and so forth, and how that all frames up? So that's just a quick difference between those two. If I go into the next slide, I'm also the chair of a conference that we've been doing out Sustainable Brands for a number of years. We call it Integrate. We're having this conference at Fordham University, hopefully in New York in the early part of November. And it's all directed towards an orientation around how does the finance organization and the CFO operate in this new world. At Integrate 21, we don't try to recreate anything that anybody else has already done, like the A4S people or SASB or others. What we do is we try to synthesize and frame up for the office of the CFO how to think about regenerative finance and what to do. This is the 5-pillar framework that creates a comprehensive lens. And I won't read the slide, but you can see it's pretty self-evident that it touches every aspect of the finance organization, including strategy, which is in the center where we put governance and planning, and then all the way from your financial planning and analysis and your controllers and your treasury people across over to IR. Harmeet kicked off the conversation here by talking about the importance of external reporting and the training of the investor relations people so that they can do the reporting effectively. And I would argue advocacy. When we get into the conversations a little bit later this morning, we'll talk about how you go from reporting to advocacy and when. Okay. And then last, we've tried to tie together for the CFO a way to think about all the moving parts of triple bottom line, mapped to ESG, mapped to what is becoming known as the 6 capitals. Again, I won't bore you with the reading of the slides here, but we think we've done a good job of figuring out how it all comes together, and if it comes together effectively in terms of looking at risk, looking at governance, how you finance investments, what business decisions and investment decisions you make, and then how do you report on them. If you think it through this lens, you're able to ensure a balanced stakeholder model. And I'll make one other final comment that might be a good kickoff point for us here. When we talk about balanced stakeholder interests, just like the Business Roundtable here in August of 2019 said, the purpose of business is changing from a purely profit maximizing model to something with larger balance. When you say it's rebalancing, that has huge implications for what you actually do. It's not good enough just to say we're going to practice balanced stakeholder interests and then all of your budgeting systems stay the same, or your capital asset pricing model stays the same, or you know, the way in which you think about short-term versus long-terms, or earnings per share versus long-term value creation. You actually have to go through the hard work of what does it mean when you say I'm balancing, and that will be the essence of the rest of this webinar. If there's interest in furthering the topic, I would recommend that people go to the Integrate 21 website, which is on SOCAP, SOCAP's website. And we're going to be doing a 7-part CFO series between now and November that will continue to talk to this subject and build on it as we approach the end of the year. With that, Lindsay, I'm going to hand it back to you.
Great. Thank you, Scott, for that perspective and for sharing some visual representation of the topics that we'll discuss today. I really in that framework that you shared there in the middle, one of the centerpiece was governance, and that was an area that I'd love to kick off our discussion today. We wanted to talk a bit about some of the strategic topics, but then also we'll dive into some of the more specific kind of tactical process-led decision making and work that our CFOs are doing within their organization. But specific to governance, we had this great discussion a few weeks ago around, you know, for every news story that's touting the growth of ESG in business, there is actually other news stories that reveals some of the gaps between stated company commitments and board behavior that can lead to accusations of greenwash and other concerns that are being raised by the public. I'd love to hear your perspectives on how your organizations, how you see business navigating this challenge to really go beyond compliance into a meaningful ESG program that truly is integrated into that business strategy.
Should we? Okay. Should I break the ice and
break the ice?
Yes.
And then we'll hand it over to Marco and Scott. So I think you know, for us, as I mentioned, you know, doing the right thing, making the right product is in our DNA. Started with Levi Strauss himself, and from his first profits, he donated to charity. You know, further the cause of education. As an organization, I think a lot of you are aware, we have a proud heritage of standing up for civil rights. We integrated our factories, you know, right in the beginning. We have terms of engagement across our supply chain that prohibit forced labor and a whole bunch of things. We've taken stands against gun violence, you know, the importance of going out to war, et cetera, et cetera. So there's a long history of it. And the way it works in the company is our board is involved right from the beginning. Is involved at the time we set strategy. You know, we have quarterly board meetings. We're going in for one this week. And every meeting with a Norm and Gov committee, we talk about a piece of you know, how we create value for all our stakeholders. So, for example, this week, you know, we're having a discussion on the issues we'll take stands on, the issues that we will not, and how does that integrate with who we are, the company, etc. Our forefathers, or you know, the Haas family, the gift they gave us was a concept called profit through principles, which is it's not only important to make money, but make it the right way. And that's something that even as a public company, we went public 2 years ago. When we went out to the investors, we said, we will practice that. We will take stands. And we think it's important because it allows us to reach our consumers and build a relationship of trust that over time will, you know, lead to long-term value creation. You know, during the pandemic, we had to do things that were important for our shareholders, important to protect the company, but we did it in a way that resonated with our values. So unfortunately, we had to lay off 15% of our, you know, corporate staff, but we ensured that we enhanced the health benefits because that was important. We didn't want people to choose. We introduced the concept of family paid leave. We introduced we initiated paying for sick leave of our hourly workers, people who really needed it. So we didn't want people to choose between, should I go to work or stay at home if I'm not well? Mental health and wellness has been something that, has been talked about. A lot of us are facing it, our families are facing it, etc. So we introduced no meetings on Fridays. Every last Friday of every month is a holiday. We want people to spend time. And then we reduce our meeting from 60 minutes to 45 minutes and from 30 to 25, largely because people were homeschooling at home and we wanted people to spend time. So we've done things that are critical. And so as decisions that we take, we put two lenses. There's a commercial lens and there's a reputational and, doing the right thing for, the people and planet, to the point that Scott made about regenerative finance. And that's how we measure our progress. And so with that, I'll, ask Marco and then Scott to
Thank you.
Their perspective on that very important question you asked.
Yeah, it's a fundamental topic, because for me, governance is also part of the strategy of the company. And for many of the CFOs on the call, I'm sure they're asking themselves, we are a good corporate social responsibility programs, or we are really having this into our strategy? Because this is a little bit the question and the change that I see also in Novartis, that originally had always had very good and strong corporate social responsibility programs, especially in giving drugs for free, programs with major important discounts. But very recently, 3 years ago, with our new CEO, the build trust with society has become our strategy. So at this point, we are setting targets to make sure that really we distribute and make sure that our drugs are received across the world. And the example of COVID, I'm sure, will increase this expectation also from our shareholders and stakeholders, because with COVID, we understand that with this type of virus, you cannot only cure the more affluent in the world, because otherwise, even from a cynic point of view, if all the others then develop the virus, then you cannot travel, for example, in the world, because only some have had the vaccine and not the others. So at this point, I'm sure that in our business, the pharmaceutical business, big changes will happen. So the governance and a precise position of the board is extremely important. I follow very attentively the work of Bob Eccles, that is always proposing to the board to take a firm statement about the company position on ESG. Otherwise, I'm not talking about greenwashing, that is far probably from the culture of the companies of those that are on this call, but the risk of a corporate social responsibility versus strategy is there. So that's why I think finance can really facilitate this discussion and make sure that the component is part of the strategy, not as a addendum of the operations.
And following up on that, Marco, Bob Eccles, a year after the Business Roundtable wrote their letter that 187, I think, CEOs signed, he challenged them with what have those boards done in that last year. You can go read that letter. I think it comes down to a couple of things here. One is moral courage. When you're facing a change, and this is a paradigmatic change, it is a fundamental shifting. You need to be able to lean in when you don't know all the answers, take risks. Make two other observations here on governance. The first is, we have audit committees on our boards and we have compensation committees on our boards. One affirmative step that could be made is to set up a subcommittee of the board that focuses on ESG related matters. Harmeet talked a lot about some of the labor practices that they're engaged in, and the human side of this. I like to say that you can't have E without S, and you can't have S without G. And it starts at that primary, the primacy at the top. And then the other thing I'll end with on governance is ensuring that there is some metric and incentive baked into the operating strategy of the company that makes this meaningful. The old adage, you get results if you don't measure it, is true. We all know that the world also operates based off of incentives. So if you provide no incentives, then it's very difficult to move that forward. So I would take this subcommittee of the board and I would say, what metric are we measuring and aiming at, or set of metrics? And you can't have a zillion of them because then you don't have any targets. You just need a few. And then you say, what incentives are we providing to our employee base to ensure that we can do that? A salesperson knows what their incentive is. They put 50% of their pay at risk, and they know if they hit their quota, they get their commission number. And they know if they go over their quota, they get to go to President's Club. And it needs to be something like that, because that's when you bake it into strategy.
Yeah,
Yeah,
that's great stuff.
just building, Lindsay, on what Scott said, we're all grappling with, the need to diversify our population, whether it's ethnic, whether it's gender, whether it's race. We're all dealing with the unfortunate events of last year, and we're all dealing with the anti-Asian, crimes that we're seeing. Being an Asian, I'm the executive sponsor of our Asian ERG, and I've published something on LinkedIn, basically condemning what's happened. But to the point that Scott was making on compensation, because it's so important to our CEO, so important to our board. When we looked at our representation, we were pretty transparent with the stats, and we looked at leadership. We realized we didn't have, a Black person on our board. We've just added a diverse candidate. We realized leadership, needed, to improve their scores. And so we have just, as we rolled up the long-term incentive comp, beginning 21, we have added diversity, equity, inclusion as incentive to improve both the stats as well as the culture. And being very transparent about it, but more importantly, putting your money where your mouth is critical. And I just call upon, folks across corporate America to start thinking through that differently if you really want to make a difference.
Yeah, that's great. Thank you, Harmeet, and thank you all for your thoughts on that particular topic. One of the things I was noting as you were all discussing governance is that risk and the events of the past 12 months was definitely a part of kind of your thought process with regards to governance as well. So I'd love to chat a bit about risk and collectively the experiences of the last 12 years or last 12 months. It feels like 12 years if you've been stuck at home with a couple of toddlers like I have. But has definitely shown us not only how brittle our households can be sometimes, but how brittle our supply chains are. And you mentioned the pandemic, and you mentioned, Harmeet, some of the work that you were doing across your supply chain. I'd love to just hear a little bit about, how, if you could share some of the ways that your business has approached submerged and external risks from an ESG lens.
Yeah, we went into the pandemic, with the understanding that supply chain was a competitive advantage, being a global company, and cross-sourcing our products across 23 countries was important. So when the pandemic happened, our vendors, were in difficulty, orders were being cut, etc. But it is important for us to emerge out of this strong, with this very resilient supply chain. And so we approached it both from a commercial angle as well as ensuring we continue to pursue our values. So let me give you a few examples. On the commercial side, we ensure that we met our commitments. If we had given commitments to purchase stuff, they were, or orders, they were honored. We extended the payment terms largely to get to industry, but as we did that to ensure our vendors, did not have financial difficulties, we developed a supplier finance program with International Finance Corporation and another vendor, so they could get subsidized financing. We also, one of the programs we've had, we were ranked by Fortune in the top 50 companies that changed the world on a program called Workers Wellbeing, where about a decade ago, we advocated to enhance financial literacy and health literacy for women who are in the manufacturing sector, largely because we felt it's the right thing to do, but importantly, also leads to higher productivity for the owners of the factories and drives higher productivity, which we have measured. And so what we did is we donated money, something that Marco talked about during the pandemic. We donated a certain percentage to ensure that the women were continued, getting the benefit of these programs. The other piece, Lindsay, that's important is today, this week is Earth Day. So we have, ensuring that we have focus on climate and water is critical. And way back in early 2018, we came up with science-based targets for climate and water. And we just wanted to make sure that even during the pandemic, there was enough focus so that the programs continue to progress. I mean, we've got targets that talk about reducing carbon emission, talk about raising, and having more renewable energy in our own and operated facilities, and also setting standards for the industry. Because we believe, while there is risk, I think if you're innovative with the supply chain, it can be a competitive advantage. And I'm happy to talk about a laser-based program which reduces the use of manual labor, reduces the use of chemicals, which has become a competitive advantage for us. And it all started with the idea that we got to reduce chemicals. So it was a sustainable idea that led to real innovation for the company. But let me stop and hand it over to the others. But I think just making sure that you emerge out of this with a resilient supply chain and focus both on the commercial as well as ensuring your values are protected and enhanced is very critical.
In the case of the pharmaceutical industry, as you can imagine, the situation was different due to the peaks of demand that we had for certain drugs versus the reduction for others. So the flexibility of our supply chain and the adaptation to the request was one of the challenge. And so for us, let's say, out of the three letters, the social aspect and making sure that we were distributing also correctly based on the discoveries also during the COVID experimentation, for example, of anti-infectives, of other drugs used for other diseases that were useful for COVID. So there was a lot of that. So what we have kept with our vendors for sure are the commitments, but we asked to them a lot of adaptability and flexibility. I think in the future, this model will be relooked differently from, I guess, the revised supply chain in the pharmaceutical. Some of the highly complex production are still much nearer to the markets of use, so in the US and Europe, while the more mature productions are from China, India, etc. So this will be revised. In our case also, as we are working on certified procedures also outside of let's say Europe, US, etc. So there is probably more uniformity, but we are applying stricter rules into our supply chain to make sure that human rights are respected, that minimum wage is also respected. And this is something that Novartis has been doing already since the year 2000, at least when we signed the compact agreement with the United Nations. So it's something that we have been doing. For sure, the flexibility and adaptability is something that we will relook. And another aspect that will change the way is the collaboration. As you may have heard and seen, I'm sure you have seen, as big pharma companies have shared equipments and factories and production lines in order to make sure, for example, to answer to the peak of request of vaccine. This is something new, and this solidarity or cooperation, it's a concept that probably in the future will change also some of the aspects of our industry.
Yes, I'm so glad you touched on that, Marco. I think that was definitely a bright spot in the past year as we navigated through that, was to see the collaboration that existed among business as we were tackling this globally, for sure. And those changes, I think, that are coming and the opportunity to learn from the year 2020 and the ways business adapted. I'm also curious, and Scott, you may have some thoughts on this specifically, around, what are some of the ways that business may be taking a different approach to financing ESG projects in the future? What are some of the other approaches and tools that we see being used?
We're sliding here from the strategic view to the process and tactical view. So I appreciate the transition here, Lindsay. Mark Kay, who's the CFO of Moody's, spoke at our conference here last year and the year before. And if you look at something simply like bonds, the cost of capital can be reduced. So there's an actual economic factor that can be taken into consideration when looking at financing costs. I, along with some colleagues, are working on adding an element to the capital asset pricing model that factors ESG considerations to reweight beta. Because if you can reweight beta, your present value on your future stream of cash flows improve. There are ways to get letters of credit that are backed up by donation guarantors as opposed to bank guarantors, lowering the cost of a letter of credit so that investment that you might need to make is easier to be made. And this is what we call regenerative financing. There's a lot of people doing a lot of work in this area, and it is the idea of really changing the traditional models so that you can say, the CFO fundamentally, next to being the business partner for the CEO, has three roles, if you synthesize it. The first is to create a systematic framework for decision making. The second is to decide what investments to make given that systematic framework and how to finance those investments. And there's only three ways to finance investments: cash flows from a corporation, equity issuances, or debt funding. Now, certainly philanthropy can come in there. Maybe it's a fourth, but that's never going to be at scale. And so we look at those three mechanisms and say, how do we reduce the cost of capital in the equation and move them across into ESG? Here's a really interesting one, and then I'll hand it off to my colleagues. I was having a lovely conversation the other day with a gentleman named Tom Chi, who's was one of the heads of Google X for a long time. And he is At One Ventures founder. And he has framed up a way to use capital gains triaged against the top problems of the world, and to simply say, come in and eliminate capital gains on these top 25 issues that are important to the world. And he's done some back-end calculations, and he thinks the ROI is 600 to 1. And it's real work being done in a real way. And the bottom line message here to the CFOs that are in the room is you need to be looking at your financing costs as you're thinking about your investments, and how ESG can be net positive to your returns, because they can be net positive. This is no longer a cost to avoid. This is an opportunity to embrace. Harmeet and Marco?
Yeah, no, that was well said, Scott. I appreciate the way you laid out your framework. I think the way we think about it. First, there is obviously direct financing, and then there is indirect financing. As the market leader in the denim industry, and someone as a company that's been around for a while, we have a responsibility to lead the industry. Water is a scarce resource. We developed waterless technique, where in the finishing process we're using 96% less water. Now, 3/4 of our product, use waterless. But we open source that technology because we wanted everybody else to use it. The other thing we did is, given the relationship we had with IFC that actually provides financing, what we said is you get subsidized financing if you are able to do the following, X, Y, Z, which are largely sustainability improvement areas, whether it's waterless, whether it is other environmental and social initiatives, because, we can help reduce the use of water. And I think since we've done this, we have consumed 4.5 billion liters less of water, and we've recycled 10 billion liters of water. The other thing that we've done, Lindsay, we've just, it's hot off the press. This week, we've announced an advertising campaign. It's the first campaign really focused on sustainability, but the campaign is really, the concept is buy better, way longer, which is buy better quality products. And we, humbly submit, our products, have a lot of sustainable elements to it, but wear them longer, because we think, if you're able to wear them longer, we believe that will reduce the consumption of precious resources, and be good for you. Our view of the world is that's the least we can do. That's very important for everybody. It's a message to the entire industry, and we feel good about it because we have developed a re-commerce program, which is a second-hand program where you can bring your product in and you can recycle it. We'll help you recycle it. Or we have tailor shops. You can bring your old product in that is torn, and we'll help you, bring it back to life. So we really focus on doing it the right way. And, somewhere again, I go back, you've got to put your money where your mouth is. And this is an important area for us.
From my side, quickly, Lindsay, as the colleagues have already explained very nicely these topics, one example that I share with those on the call, for example, Novartis has issued sustainable bonds, linked to our results in the low-income countries in terms of number of patients treated. So Novartis has a target to reach in 5 years to more than double the number of patients treated in those low-income countries. And then there is a higher interest related whether Novartis or not will reach the target. This, I think, is also a little bit a marketing, let's call it, tool, but for the finance population, it's a very nicely way to link debt with projects, KPIs and targets with results, and communicate also internally and externally about it.
Great, thank you. Great discussion. And I want to make sure, because we've had some good points that you've made around, the decision-making, internal decision-making. Harmeet, you've already referenced some of the marketing decisions that are being made and the connectivity to some of the decisions that are being made at the strategic level. I think you've all touched on the need for that. Marco, you've referenced the need for that integration, that collaboration, at that level. So I would love to transition before we need to take questions from some of our viewers today to the integrated reporting topic. Last week, 300 companies petitioned President Biden calling for more government commitments on climate change. Meanwhile, the New Zealand government is requiring some mandatory business disclosures on climate change risks. And you've all been engaged in companies and have been involved in reporting. I'd love to hear your thoughts on the role of finance in some of this non-financial reporting. And what does the future hold for that? And how is finance even making and helping make decisions within the organization on evolving that into advocacy. So not just reporting, but also advocacy. And we saw even Levi's speaking out on the topics of voter rights recently, which felt new to me. I was very familiar with some of the work that Levi's had done within the social space, but this is now an expectation of leaders within organizations. And I'd love to hear your thoughts on this topic.
Since you called us out, I'll take a quick stab at that wonderful question. As you said,
Harmeet, we're calling you in.
We were one of the companies that signed the letter to the president, and our CEO, talked about voting advocacy, something that we've been talking about, ensuring that people express the right to vote, for the last couple of years, and it was important for us to take to extend that commitment, because we think it's important. In terms of reporting, the way we are thinking of it, and I'm working with the Accounting for Sustainability organization. What we do today at Levi's is we have a sustainability reporting as part of our annual report. We are making it more holistic going forward. It's going to encompass our efforts on ESG. And while we talk about ESG, my view is you got to add another E, which is employees. I think they deserve their own space in the ESG piece, because they're becoming an important piece of the pie. But I think going forward, there is really, at least in corporate America, there's really no standardized reporting. SASB has made an effort. There are other organizations. I think with the change of guard in the SEC, there is openness to start thinking about financial disclosure. And our view of the world is, at some stage, the disclosure is part of the 10K reporting, because as Marco and Scott know, once you put it in the 10K, it raises the bar, both from making it happen as well as validating what's happening, etc. And what we're doing internally is we are collaborating with our sustainability group. And we have a group that really, their day job is focused on this. We're collaborating with them to develop, reporting that is sustainable over a period of time and is integrated like any other financial reporting, rather than happening, by a separate group. So I think that's, the focus. So I think coming up with uniform standards of reporting, then making it a habit, integrating it with basic financial reporting is the way we get this going. It's a journey. It's not going to happen overnight. Let's focus on the core topics, and I would table climate and water probably are the core issues right now. I mean, obviously employees are important, and there are a couple of other areas. So the way we think about it, Lindsay, is we've done a materiality study on what's critical for the company and the industry, and we're focused on those areas. But I think it's a journey. It will take everybody to work together. I would only call out our investors and investors in general to help us and collaborate with us as we take this forward, because if they put pressure, I think it will begin to accelerate over time.
Yes, the convergence.
Yeah, Marco, as a Europe-based executive on this topic.
Exactly. As you mentioned at the beginning, I'm part of this B20 group, that is a group of corporations that will submit a recommendation to the G20 that will happen during this year. And Italy is the leading country for this G20. And I would like to share a piece of information that we are promoting the harmonization of existing non-financial disclosure frameworks to promote transparency and comparability, to reinforce global governance, to speed innovation for environmental disaster management. So in this group that is dealing with disaster management, we are asking ourselves, if we don't have a globally agreed way of reporting this information, how then you can manage and prioritize industries or actions and so on. So as you notice, even in this group that to a certain extent could be considered as quite far from the core reporting that was mentioned by Harmeet, there is this convergence. So I really think that this will accelerate, and more rapidly we will go to an agreed way of reporting and letting also investors, stakeholders to compare one company with another.
Great.
Lindsay, why don't we open it up for some questions here?
I think that was perfect timing.
All right, this is
Steph.
Thank you, Lindsay, and thank you, everyone. That was absolutely fantastic. I have pages of notes and, of course, a number of questions, as always the case. But I wanted to open it up to the group as well. So if anybody's on the line that wants to ask a question, we are going to use the raise hand function in Zoom. And I'll just kick it off with the first one. You know, I think something that's coming out of today's discussion, which has been just so prevalent, is this notion of collaboration. So I have a question for the panel, and maybe this is, you know, Marco and Harmeet, a little bit more towards you as kind of brand leaders. And how do you think about balancing open source in the spirit of collaboration and solidarity and betterment with protecting your brand and reputational advantage as being a leader in ESG, and knowing that that's a way that your consumers or your partners or your end markets are connecting with you? So how do you think about balancing that?
I think it's a very important piece of discussion. I'll give you two examples. And you know, we're very open to, as a market leader, we're very open to leading the industry and moving the industry forward. And we do put our money where our mouth is. So you know, I talked about the waterless technology, and we open sourced it. We had a discussion, should we do it or not? We thought it was the right call for the industry. We open sourced it. I talked about the advertising, buy better, way longer. That's also taking a stand on where we think we should be moving as an industry. On the flip side, I talked about the FLX technology, where traditionally we finish our our jeans using manual labor, the holes of the distressed look, as well as the finishing was done by labor. We came up with laser technology, and it actually started with, let's reduce chemicals, let's reduce potassium permanganate, which we reduced, and in the process eliminated about 1,000 chemicals. Plus we moved the finishing, from about 2 minutes, we took it down to about 20 seconds because it takes time. Plus it's a competitive advantage because we can finish it closer to when we marketed rather than doing something about a year ago. That is something that we've we think is proprietary for a while. We filed our own patents and we've kept it with us for a while. We haven't said that, it's something that we'll have, for an indefinite period, but I think that's how we think about it. Things that are competitive advantage, we kind of keep. Things that we think we can lead the industry on, we do open source. And those are some examples. But I think having that discussion, to your point about making sure there's a balance, is very critical.
I'll give you two examples here of industries doing this work. One is the Alliance to End Plastic Waste, aepw.org. They are all about made determinations, Procter & Gamble, Unilever, BASF, 3M, and other companies too. It says, look, we all need to be figuring out how to end plastic waste and single-use plastics. And so they formed a consortium. There's over $1 billion in it for innovation. There's another organization that's associated with the UN. It's called the USA Coalition on Sustainability, that has a open sourced software platform called Sustain Chain, where you can go in and register for free and look at all the different innovations that are happening, either as an entrepreneur or as a corporate or as an investor, and see what those innovations are and participate openly in the various projects. And that's a collaborative frame. Those are two examples, Lindsay.
Those are great. We have a couple of questions that are coming in from the audience. So Jeff, I'm going to turn it over to you first. Jeff Pennis.
Yeah, can you hear me?
We can. Go ahead.
Great, thank you. I've enjoyed the discussion so far today. I have a question, it's kind of two parts, but I'll get to as fast as I can. When you talk about the regenerative financing, you know, something that's non-standard financing, which I think, you know, definitely opens the door for a lot of stuff in the collaboration. But when you look at that, and I know that Marco mentioned this, the structure seems to be the standardized methodology is really absent in the bigger picture across all of these discussions that we have. And I'm in many of them, and I know several of you are as well. It seems a little bit overwhelming to those of us who are trying to help our organizations get there. And when you look at the lack of structure really seems to be the biggest barrier from me in boots on the ground type position. And if you bring in non-traditional financing with less sophisticated lenders, so to speak, they're really going to need the help from that, you know. And as we look at organizations, when you want to help, you've got to add oversight and layers, and you have to have red tape, and that's human power, and that's an expense. So how do we look at organizations like you mentioned, like the Alliance to End Plastic Waste, U.S. Plastic Pact, which is gaining traction, you know, with Walmart and other companies joining in the Ellen MacArthur Foundation? Mm-hmm. How do we bring these together? I mean, are there ideas behind the scenes of saying, hey, look, we have people that want to help, and there are things going on, but it's extremely non-standardized. Mm-hmm. And so I'm throwing that to the group to kind of say, give us the light at the end of the tunnel on how we can feel good about what we pick moving forward, because it almost feels like if we pick the wrong path now, mm-hmm. You know, we're dead in the water in 2025. That's my question.
Lindsay, would you mind if I take that one? It's a kind of it's almost like Jeff, an easy question. So it's the mission of Integrate, the conference that we're going to hold later this year, which is, how do you do this? We're not going to reinvent anybody's work, but it's trying to synthesize this. So what we formed was a task force called the Integrate Working Group. There's about 20 people on it from all these different groups, from SASE, from GRI, from NASDAQ, from the Long-Term Stock Exchange, A4S, et cetera, where we keep pulling together what are the best practices, what is happening. Harmeet said it exactly right about halfway through this webinar. This is a journey. This is not anything that we are going to solve in a year or 2 or 3. Technologies will continue to advance. And what we need to be comfortable with is if we all know what our North Star is, which is a regenerative future, we're all going to get there in different ways. And rather than figuring out every answer before we start, it's just starting the journey, knowing that it's right. And I promise, because I've experienced this personally, as that journey begins, you will meet the people that you need to meet, because they're on that journey with you. And then that will segue into another person, which will segue into another person. So it's sometimes hard when we want it all figured out before we start. This is any new industry. We don't know. When the internet started, oh my God, you know, look at 94, you know. I think, you know, we will get there. Standards will evolve by industry, by the way. And I also believe one other thing wholly, which is there doesn't need to be tens of millions of people figuring this stuff out. There needs to be 10 or 20 or 30 per industry, and it'll all get figured out, which means it's less overwhelming.
And Scott, in my opinion, this could also be the beauty of the job of the CFO, to bring in these uncertain times some of his or her interpretation to the board, and as Harmeet was saying at the beginning, in the role of the CFO, make sure that the tone of the top is there and some of the information are brought by the CFOs to the leaders. There is a lot of uncertainty, but the direction, it is clear.
Jeff, thank you.
Moral courage. Anyway.
Yeah, thank you for that question, Jeff. And I wanted to just reinforce, Marco, something that you were saying. I think, you know, what I heard you guys say today is that the decisions of today do not need to be the decisions of tomorrow per se. So the standard metrics that we use today might look different than 5 years from today as the industry evolves, and hopefully they do. But the metrics also evolve. We have a question from Sarah Bostwick. Sarah, you can unmute your line and join in.
Hi, everybody. I'm on the global sustainability team at Philip Morris International. We report directly to our chief financial officer. And my question is for Marco. Speaking of alternative and innovative financial instruments that the last caller asked about, your sustainability linked bond, how have investors received that? What's been the feedback? Is it something you would choose to do again if you had to do it all over again? Any learnings? Thank you.
First of all, I should ask to my global CFO this question, but based on my experience and what was shared internally was a real success. As you know, as of today, not many of these sustainable bonds have been issued, so it's a relatively new area of development, and so that was a big success. And today there is a real request. Maybe it's even too trendy if something is ESG branded and it goes to the market, it really gets sold in really few seconds, I would say. But it was a real success, as I said, because it links for me the strategy of our build trust with society, our external orientation and social orientation, with some tangible results that are also communicated externally. The total amount was $2 billion, which is an important amount, but not as huge as other that we did.
Thank you, Marco. Anyone else want to join in on the panel?
I'm sure Harmeet knows also more on this topic than me.
No, I think first I congratulate you for doing it. I think the broader question it opens up is vendor and supplier diversity. Because, you know, to ensure whether it's a banking relationship, whether it's a relationship with other vendors, are we all focused on broadening the base and thinking through it? And that's something we have started the journey on. It's early stages, but again, goes back to the point I think you made, Scott, earlier, which is first, let's start with what's the reality, then let's measure it, and let's then start the journey towards an end goal. And I think, you know, it's going to happen over time. We will test our way through it, like it's launching a new product. You test it first, and then you launch it, and then you scale it. I think the same thing is with the ESG initiatives that all of us are working on.
You know, real quick, with self-driving cars, when they first began to do the technology, the decision cycles inside the software were in the millisecond range. And here we are less than a decade in, and they're now in the nanosecond range.
We don't have any further questions. Lindsay, any final comments from you? Otherwise, I can close it out after you're done.
I think this has been a great discussion. Thank you all, Harmeet, Marco, and Scott, for joining us today. We hope that this was valuable for our participants, and Stephanie will wrap it up with next steps and how you can find the recorded conversation.
Yes, so if you register for today's event, you will get a link for the recording. Also wanted to just flag that we have 2 more webinars in this series. The next one is May 4th. So we're off next week, and then we're back the following week. And that is part 3, entitled The Business Case for Sustainability. And then our 4th will be on May 18th, Integrating Sustainability into Financial Returns. So come back for part 3 and part 4 after a 1-week hiatus. And I would just echo, Lindsay, your comments. Thank you to the panel today. Very, very helpful, very informative. And I think, you know, Marco and Scott and Harmeet, you also all echoed a sense of hopefulness, which we are all desperately wanting right now. So thank you for that. I'm walking away today feeling very hopeful. So thank you. Everyone, please have a great afternoon. And if you have any follow-up questions, please reach out to any of us. Take care.
Thank you.
Thank you, Stephanie. Thank you, Lindsay. Thank you all.
Bye.
Bye. Bye.
Bye-bye.